Hi everybody, Brian here from quantlabs.net. Just wanted to let you know what's going on. It's been a very long time since I posted anything here on Facebook Live. Quantlabs.net, the page. Okay, so I've been working on a variety of variations on this strategy for cryptocurrency, be it with different types of parameters, different types of I'm trying to think. It's been a while. Different combinations of thresholds, parameters, timing, and goals. So, I think I have something that may actually work. It's being able to set the target that you want to make profit, and how much you're willing to risk on the downside, meaning maybe 0.5% you're willing to tolerate for the day. It all comes down to how much you want to set. And also it depends upon market conditions. If you've seen my YouTube videos over the last couple of weeks, you'll know that I've been focusing a lot on this, which not a lot of people do. And they just assume to run their strategies all the time, the algorithms. That's not the case. Over the last week or so, I have been focusing a lot, talking to a variety of people from Forex traders, highly experienced Forex traders, consultants that write very highly profitable strategies for, look at this. Yeah, anyways, highly profitable strategies. Hey, Andrew, how you doing? Highly profitable strategies for people in the multi-millions. So I have come away with experience, and this is it. When it comes to running a strategy 24 hours, 7 days a week, and you're getting 100% win rate, go for it, run it. When you get a strategy that is hitting a certain percentage in a daily target, you stop and let it either pause for a couple hours based upon a certain set amount of market conditions, or just for reporting purposes, you just let it start up again on the next day, preferably depending upon how you're reporting, assuming to be midnight. So you let it run until it hits its target of, let's say, 1%, or if you're in a down market, not let it go beyond negative 0.5%. That's what I'm setting it at. What I'm finding is I'm going to be running two variations of this, going maybe tonight, maybe tomorrow, because again, you know that the cryptocurrency markets do not close. So I'm going to be running two variations of the core strategy. All the trading rules are the same. The only difference is when the strategy hits a certain target, it will either completely shut down, wait till midnight, and start up again and hope for the best that next trading day. So that's one condition I'm going to do. The next, maybe you've seen it, maybe you haven't seen it in my videos, but it's quite clear that I can have very good days and very bad days on the trading performance. So a week ago, I had one day up 5%, down 8% the next day. Not a way to trade at all, in any which way you look at it. You need to set rules, you need to set goals, and you need to stick to those goals and be a disciplined trader. Highly, highly critical to be successful in this game. So the point is that if you set goals, stick to them no matter what. In my case, I want to be able to make just 1%. I'd be happy with that, 1% 7 days a week, and let the compounded interest take hold and hopefully get a 66 or 2/3% win ratio to be able to build the account in a fairly quick pace. That's important to me, and I've talked to numerous people about it, and they all agree it's the only way to win the game. The other thing is that when you trade like that, and you not what they call overtrade, so you hit your daily target, you want to protect that target and that profit level and not go beyond that and risk that profit that you've made when you what they call overtrade and you start to lose that profit target. You don't want to do that, so you shut down. You may watch a lot of gurus, Ross Cameron over at Warrior Trader, even of all guys, Tim Sykes. I follow these guys and I watch them quite religiously, and I've watched a lot of some of the patterns that they've used. The keys element that I've seen over and over again talking to other people is the same. What they do is they'll go in on the opening date if they're trading stocks, wait for the New York Open, and basically they'll set targets for the day. Once they reach that target, they shut down, wait for the next day, and keep trading like that, and rely on the compounded interest from achieving those goals. And usually it works, and it gets them to fairly high profit levels pretty quickly in short order. The other thing that I'm noticing that's really important is when it comes to stock, and this is I don't agree with, but I'm starting small, is they put a lot of capital into a few amount of trades. For me, that's a little high risky because from what I've seen with my strategy, I could have, let's say, 10 positions at any point, no matter what market condition it is. So let me rephrase that. If I have my market condition at where the market, when I say the market, I'm talking about the cryptocurrency market. I have a script that what it will do, it will go out and assess all cryptocurrencies. It will look for the last set of moves over the last 3 to 6 hours. And usually what I'm finding, the trend where you get really, really profitable is when those top 5 are on average with a weighted average at 1% between them with the top 5. And what I'm finding with that is I get much higher ratio of wins. Historically, when I test that, what I find is if I put on 10 random positions, within 5, maximum 6, it's going to hit that 1% in that market condition. Usually, my stop not losses, but my downside tolerance is very, very tight. I will not take on a position. I will not hang on to a position once it hits zero. Once it hits zero, it just dumps the trade. It doesn't matter because probability says it's not only going to go down, but it will go down. Probability, that's from the amount of testing I've been doing for the last month. So that's the probability. Another thing, and this is only available in cryptocurrencies, very important fact that I've seen historically. What I found is if I run this thing 24 hours, 48 hours, the cryptocurrency space, the market, the asset class, will go up and hit that market condition of a weighted average of 1% on the top 5. Everything's correlated for the entire number of cryptocurrency pairs out there. As you know, I trade 300. I have a market criteria before I take on a trade, before I put on a position of a certain volume over an hour. I don't care where it's at because the volume can be really high 1 minute and the volume will be very low the next minute. But the most recent trade set of volume data I'm looking for is going to be about 75,000 per hour. When I do that, what happens is the amount of losing positions I take on is a very much higher, or say lower probability of taking on a very, very bad trade. So that's one condition I look for. And usually I get rid of about probably 90% of bad trades and I cut them all out because of that volume check. On top of that, what I'm also finding is really important is you want to check on the data, market data of that asset. As you know, I look for RSI. I'm also looking for, what's the other one? Momentum and a rate of change, of change percentage-wise. I don't need to apply ATRs and any other weird indicators, but RSI seems to work kind of nice, and it's real time, it does not lag. So if I have my RSI and it's weird, but when it hits 60, 70, 80, I know that position, the volume's going to be pretty high. A lot of algos are going to be piling in to take advantage of that opportunity. I see that countless times. The thing is that when you put on that kind of trade or that kind of position, you need to ensure at what point is the volume high in that spike. Is it in the early stages of it? Is it in the middle stage? Or is it in the last stage? Because usually if you're taking on that position in the last stage, it will dip. And not only will it dip, but it'll dip very fast. So if you take on a position too late in that spike, you're going to lose money, but you're going to lose money big. I had 2 positions last week that within a minute lost 2%. And that's a pretty big hit when you are working on 1% profits for a couple of days, and all of a sudden you get 2 or even 4% loss in a day. So you don't want to take those on. They're very hard to find. So what you got to do is that the first wave of filtering is volume, and the second is you got to make sure that the momentum, or if you were to do a regression on the last set of market data, is positive. And you can also, based using a regression, using a slope measurement or an angle to make sure it's profitable and positive. And you can measure that slope to make sure that that spike is still in the early stages, because once you know that the slope of that regression is starting to go negative or hitting close to zero, then you know you're in the last stages of that volume spike. So it's really important to understand that. The other factor is to understand momentum as well, and understand when you start looking at the last set of bars, depending upon the data time frame that you're looking at. When I take on a position, I always look at minute data. That's no doubt on that. But I'm also looking before I take on a position, and I accept it and have the system take on that position. I'm not only looking at volume as a first filter, but the second set of filters I'm looking at is for making sure that the momentum on a 5-minute is positive and that the regression result is positive. I'm using TALib and Python, and works okay. Another condition you want to look for is to make sure in the last set of period, if it's over an hour, 3 hours, that you don't see a lot of negative hits on the regression, because what will happen is you're in a choppy mode. You want to only see positive momentum, because if you start to see negative, that means that a lot of the volume that's coming in is starting to drop off and probably dumping those positions as the market, as that asset, cryptocurrency pair drops off, and then you know that it's going to fall pretty fast. This is how most traders trade that I've seen, looking for these spikes. They're also looking, using scanners is the other big factor that they look for, or a tool that they use for. So I don't like to say instant wealth, but for potential really good hit ratio, really good strong profit levels every day, and having a decent win ratio of, let's say, it seems to be 66%, at least 60% win ratio. In order to achieve this, they gotta make sure that they're looking for the spikes, and that when they put those positions on, that you are able to time it right. And as I said, all the stuff that I've already mentioned is one way to do it. And even though it doesn't make sense, one thing you do not want to do is trade in a falling knife environment. You want to make sure, as I said, you want to have positive momentum and positive resistance. Now, I just learned this last night, and I'm going to be testing it. There's two things I did not know about. I mean, some of this stuff is so basic. You can use both RSI and momentum on the same chart, no matter what time frame you're looking at. As I said, I look at 5-minute, 15-minute, and hourly before I put on a position. Once I put on the position, I switch over for that position to minute data. There you go. But looking at all of this, all three time frames of 5, 15-minute, and hourly have to be at a certain volume, have to be all positive to have that momentum behind it. And then once you put on the position, you want to make sure you have, as I said, positive momentum, positive regression, very critical. And it seems to work. And as I said earlier, there's other ways to eliminate the potential bad trades. That's why I have these 2 extra filters to make sure that the position it takes on are not bad. The other thing that is critical and I can only speak about cryptocurrencies right now, is you want to make sure, as I said earlier, is that you do not want to trade in a falling knife environment, because you have a much higher probability you're going to put on losing trades. There's the odd trade that will do well, but it might take you 10, 20 positions to get profitable, and you'll go through excessive amount of losses to find that positive position from what I'm seeing over the last few days. So what I can do is, as I said earlier, I can have a strategy weighted out and wait for those market conditions to come back at 1% for the top big 5 crypto pairs, or sorry, well, crypto pairs, yeah. And once I have that, then I'll go into an aggressive mode and start trading. I have a video up that I put up there where there's 4 modes of trading and being able to quantify the risk. I set it at what I call aggressive. It's over 1% for all 5. If it's greater than 0.5%, then it's moderately aggressive. But yet, again, we're not sure on the timing of that volume spike. Once it hits 1%, then we know it's in aggressive mode, guaranteed. If it's 5.5% and higher, the average weighted average of those 5 big cryptocurrency pairs, then you go ahead and trade, but you have to have your strategy self-adapt to reduce the risk when you put on positions in order to ensure that you get profitable positions. So that's what I'm doing is I'm having the strategy self-adapt to the market condition. Also, with this weighted average of the big 5, if it's less than 5.5%, half a percent, that means that the asset class, the cryptocurrency at that point, is what I call minemic, meaning there's a bit of potential profitability there, but it's not, because it's still really negative. And obviously, you don't want to take any positions when the overall top 5 are below 0 or negative. So you don't trade in those conditions. What I'm going to be testing for is to only trade when we have the weighted average being above 1%. And usually, from what I'm seeing in the last couple of weeks, it happens twice a day. In a 24-hour period, you'll get that twice a day guaranteed. So I don't have to force my strategy to stay open all that time when the weighted average is below 1%. I can just have it go in aggressive mode, trade only in aggressive mode, and I'm going to have those opportunities twice a day, at least once a day. So that means I don't have to overtrade. I don't have to keep the strategy going, and then basically have the strategy hopefully maintain some form of profit if it meets that profitable goal of 1%. So here's the thing. As I said earlier, I'm going to be having 2 sets of strategies, same trading logic, same everything, trading rules will be the same. The only difference is, as I said, test 1 is to test it where it goes into this aggressive mode because all 5 of the big crypto coins are at their weighted averages above 1%, so it's not an aggressive mode. As I said, that happens once a day. Because of that, that gives me the option to wait it out. Once we hit aggressive mode, have the strategy go into this trading to go in and start trading, trying to achieve the 1% daily goal. Once it achieves that 1%, I have 2 options. And the first thing I want to test for, as I said earlier, is the first test. I want to make sure that once it hits 1%, the 2 options I have: shut down completely, wait it out till the next midnight period for the next day, and go back and repeat and wait it out for the next aggressive mode of being where that weighted average of the big 5 hit 1% again. Again, usually within that 24-hour period. And that's when I have the strategy running and running only. The other option I have to test, as that's the first scenario, the other option is to have the strategy activate, wake up, start trading once the weighted average of the 5 hit 1%. And then I'll shut down once the goal is achieved. And then I'll wait it out, even though the next 24-hour period has not been met, meaning it won't wait until midnight. If the market conditions, or what I call, as I said, risk on, and that weighted average of the top 5 big cryptocurrency coins drops off, goes below the 1% that I'm looking for, it'll just sit there testing the market, waiting for the weighted average every hour, and once it comes back at 1%, start trading again. As I said, from what I've seen, it can happen twice a day in a 24-hour period. So we have now a second testing scenario where we go into an aggressive trading mode, maybe twice a day, maybe once a day, maybe not, just depends on the market. But it could be 3 times a day, and test the results of that on the trades. and see which one wins out to get the 1% that I'm after every day. And whichever one consistently, and the key word is consistently wins, I'll go with that. To me, what I think, and from what I'm talking to people, they just say, go into aggressive mode once, and then once you achieve the goal and the target, shut down, start it up again in the 24-hour, the next midnight period, and wait it out until you hit the next trading situation where the market conditions come back at 1% at the weighted average, and then trade again, hit the target, and then shut down, wait for the next midnight period the next day. And that's what I think will happen for this to win. But I need to convince myself that the other scenario is not the better one, meaning it will overtrade and probably lose more money than it needs to. And that's the problem. And I need to test that. It'll probably take me a couple of days. Once I get the results, I'll put a webinar together on that, because then I have something to work with and work from. I do think, from what I've seen, every day I'm hitting a 1% trade, and that's great. But what I also need to do is to prevent from taking on the bad trades if they go down 1%, or not 1%, 0.2% or 0.3%, because those little ones, when there's too many of them, it exceeds my limit. So I have to ensure I have these target levels really, 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 really tight to prevent these potential bad trades from happening. So from what I'm seeing, majority of them, about 95% of them, don't even hit don't even go 0.25. So I'm okay there for maybe 2 maximum, and that's it. And then there's the odd one that will bring everything down, which I don't want. So I need to control that. So that's what I'm testing for. Really important stuff, because I think this strategy can win. And if I see there's positive results from this, I can then increase my daily target of maybe 1%, 1.5%, or even if I'm lucky, 2%. Because I'm also seeing that this will work on the overall the overall 300 cryptocurrencies pairs that I can trade. But I might have a second derivative of this to only focus on the top 5 or maybe even the top 10. Just depends upon the performance. But what I'm finding, though, is if you were to look at my back end on the risk on document where it breaks out all the percent moves, you will find majority of them can be 2% move up, sometimes a 3%, and Bitcoin's only up 0.5. So knowing these factors can really excel your profitability by looking at these different percent moves on the top 5, and it's really, really helpful, because you see opportunities that you won't see otherwise, unless you dig into the logs that I've been going on about for the last month. Hopefully this will help you. If you got a question, Andrew, you got a question? Thanks for watching this all this time so far. Got a question? Let me know. If not, I'm gonna do another one whenever I can. Just been really digging in this stuff crazily from a software development point of view, and I'm learning a lot. If you have been watching all my debugging commercials, no problem. If you've been watching my debugging videos, I'm going to be taking them offline and putting them in my back end because they're pretty valuable, I'm finding. And it amazes me that a lot of people do not focus on this when it comes to debugging a strategy. I'll talk about conceptually, I think it may work, never does. I have yet to say, I think it's going to work, and it doesn't. Never works out that way. And you're consistently looking for solutions. And from what I'm seeing, I am getting my 1%, but you got to know when to shut it down. That's the key. Once you hit 1%, even if you don't hit 1%, you start to net out even some of the tiny losing positions, you could be up 0.5% and you're still winning. That's awesome. And you do that each and every day, 7 days a week. You're doing pretty good. And I'm going to be honest with you. I don't know anybody out there that's actually doing it and actively, putting themselves online like I do, showing it, because it's one thing to brag about all this stuff, but this seems to work pretty nice, and there's not a lot of indicators. Just the RSI, and then the ROC, the rate of change. And it seems to work kind of nice, but then you can also do the regression, the momentum on the fly to make sure that you're in a positive, man. Later.